Builders, welcome back. Let's dive into it today. Let's have some fun. Let's talk about it. Hey, I'm Matt.
I'm Potter.
Welcome to the channel where we build financial power. Today, we're going over the area of the financial market, traditional money, and then the crypto market. What are the comparisons? What are the contrasts, the differences? We want to dive into it. If you're new to this channel, appreciate you sliding by. Every Thursday, Friday, we go live 10 Eastern. We're having a heck of a lot of fun, and we're diving into the world of magic internet money. Has quite a bit of experience. I'm in my process of learning. We're both still learning, but we're diving down this world. It's super exciting. Today, we wanted to compare both of the worlds because we hear a lot in crypto of bearish and bullish and this and that, and there's a lot of similarities and a lot of differences. So I want to dive into some of those pieces. But before we dive into it, checking in with Potter. How's your morning? How you feeling? How you doing?
Pretty good. You know, I had said that there was nothing that was going to happen in January. When I heard that they were talking about raising, the interest rates, I was like, ooh, I don't think anything is going to happen. And then when they announced that, oh, well, we'll let you know in March, I'm like, the market's not going to do anything until that's done. So that's behind us. Now we can kind of see, what's ahead. And it looks like a better financial world for us.
Yeah, and you had shot me a text and you were talking about that. So did they actually come out with a different rate? Like if they increased the rate?
No, they went with 25.
Okay.
And so what I've learned, and this is back in the .com days, what I learned was the more speculation about anything, the more people just they don't participate, especially when there's Fed rates, because if they go higher than a street assumes, it just goes to pot, right? So I was like, there's no way with a war going on, with us not understanding what inflation is or what the Fed has to do with it, no broker is going to say, hey, you know what? Let me just put your money out there. I got a good feeling. They have to make their clients money, so they're going to say, no, we shouldn't go in right now.
Okay. Interesting. Well, speaking of the traditional world versus the crypto world, something I'll admit I don't have a full-blown grasp on. By the way, Era's in the comments. What's up, man? Appreciate you being here. I'm glad you're here. We're glad we're here. Talking about liquidity. And Potter and I were talking before the show about like, okay, well, what is at least one concept that we hear of so much in the crypto world that's also in the traditional money world? Liquidity, crypto liquidity. Is there a difference in crypto liquidity versus, I guess, the traditional financial market world?
They're based on the same thing.
Okay.
When Satoshi put it together, I don't know if he necessarily had DeFi in mind, but it works the same way. In the bonds area, what happens in the banking industry is they get a whole lot of money, and then they print you off a little certificate, but they've got so much money. They have so much liquidity. They can afford to mint you something that kind of pays you like a reward, like it does in crypto. Okay. So liquidity in crypto is really just saying, hey, it's some level of assurance that with a signed contract that you're investing in that company. And they usually pair it with something. So the liquidity is how much money has been given to the DAO, the DApp.
Okay. So would you, like, let's just say it, because a lot of people know, even if they're not into money, they know, oh, a stock is a thing that you make money in. Stocks, do they have a liquidity pool?
They can.
Okay.
I mean, I don't think that those wires are supposed to cross. Because they have a market cap, and part of the market cap is based on the liquidity.
Okay.
It just works so much faster in crypto. It comes and goes real quick. It can happen really quick in the stock market, but it's not expected to always happen like that. And it pretty much is expected to happen like that in crypto.
Okay. So it's not like, so then if it's not the actual, I guess, stocks as a whole that has liquidity, is it like, let's just say Apple, because that's a huge stock that everyone knows, like Apple, the company itself has the liquidity? Is that more of the, I guess, correct verbiage? Not really.
Well, they have a market cap.
Okay. Okay.
So you can assume that they have liquidity.
Hmm.
If they have, so when you do projects in corporate America, you know, you need to have projects funded. So it's more like that liquidity versus market cap in crypto.
Okay.
It's this is a topic that we're going to explore through our life of this thing, because we're going to get better explanations of it for everyone, because it is the banking industry and crypto are so closely aligned, because, you know, Satoshi did develop it because of what happened in the market crash. Didn't want to see that again.
Okay. So then just a refresher, then let's just say in drip, because that is a cryptocurrency that it's a network that we're both involved in. The liquidity pool of drip, what does that mean?
So we have two. We have BNB BUSD, and we have drip BUSD, and we have drip BNB. Those are two liquidity pools.
Okay.
One is more volatile, one is safer.
Okay.
Because one is pegged to the dollar and one is pegged to the volatile price of BNB. So yes, those are liquidity pools.
Yep.
And through those liquidity pools, rewards are generated. One by rehypothecation. Collateral rehypothecation is one of them, right? And then the other one is just based on the volatility of the BNB.
Like the appreciation, depreciation. Okay, got it. Now the hypothetical what was that?
Collateral rehypothecation.
Okay, I've never heard that word in my life. That is in my brain.
Yeah.
Trippy. All right.
It's basically when you take something and you use that something to borrow, get something to get something back.
Okay. All right. Yeah. Okay. That connects. Yeah. When you go buy, use the USD to buy the BNB to buy the. Okay, got it. That makes sense. That makes sense. Aaron just said, bought some this morning. Right on, man. Right on.
Good job, dude.
Right on, man.
Did you buy the dip or did you buy the? Well, it was kind of a dip still.
Yeah. I mean, I keep hearing people be like, the trend line reversal hasn't hit support with the fluctuation of the synchronization
of the Fibonacci.
Exactly. Pi squared. So moving on to the next topic, bullish and bearish. If you're new to crypto, if you're anywhere in the space, especially of drip, you might have heard the term bullish thrown around and maybe the term bearish. And I actually didn't know that. Well, no, I guess I did know, but I guess I never heard anybody saying it. But bullish and bearish didn't come from the crypto world. Bullish and bearish has been used in like stock trading for a long time. And I was thinking about it and I was like, where the heck did they come up with that term? Like, we know that a bull market is like things are on the uprise. It's a bear market, it's going down. But like, okay, why didn't you say like it's a chicken market, or like it's a like, why didn't you name it something else? So the term bear and bull is thought to derive from the way that in which the animal attacks its opponents. This is a bull when it thrusts its horns up in the air, while a bear swipes down. Now, that's Investopedia, so could be completely wrong, but it sounds good.
They're on the internet. It must be true. Thank you, Investopedia.
It's got to be fact. It's got to be fact.
Don't forget to contribute. I'm sure they live off of donations.
I would imagine. I thought that was a cool little thing, because now when I have sort of the why behind it, I'm able to process things better. You know, somebody just says, you say bullish when it's going up, or you believe it's going up. When I understand the history behind that, just, I don't know, it gives me something to anchor on to. So just a little factoid for you.
So was it just the fact that you just heard it so much being used?
Yeah, I've heard it. I've heard bullish used so much that it's almost watered down. I've heard it so much, you know. And then I started really questioning. I was like, well, I know that means I believe it's going up, or it's going up, or whatever. But like, it's been used so much. And granted, I've been looking at a lot of crypto creators and reading and whatnot, so that's why I've been hearing it a lot more. But yeah, for me, hearing the history on it, that always does it for me. Sort of locks it in the brain.
Yeah, that makes sense.
We got any comments there? Let's see here. What's Eric got?
He said 59 when he was sleeping. Unfortunately, it went up.
Yeah, prices are moving. That's for sure.
Nice.
So moving into this next sort of topic, my dad was in traditional banking for 33 years. He was the vice president of a bank, and he had worked in banks for a long time. And I always heard about banks and certificate of deposits, CDs, about how safe they are. I always heard about FDIC backed banks. And I mean, as a young person, I knew what these terms were just because I was around it quite a bit. So in my head, FDIC backed and CDs and the stability of the bank is what was always instilled in me. And, you know, if you hear the term FDIC backed, some people don't know what it is. Some people do. What it means is an insured account. An FDIC insured account is a bank account at an institution where deposits are federally protected against bank failure or theft. So basically, it's insurance. But I just think that's, again, for me, knowing the history, knowing what it's coming from, instead of just hearing FDIC, I understand. So that's where banks get some of their trust, security, if you will. I don't know, like, were you familiar with that term at all, or is it just me that's a psycho and I've always heard it and thought about it?
Well, I'm a cybersecurity person, so
there you go.
You know, sometimes you run across that financial institution that has to adhere to that, or you're working with somebody who's an audit client. And they have some cybersecurity thing, and you know about FDIC, or you're just a person who's like trying to get a loan, and so somebody will say, "Well, it's an FDIC insured bank," you know.
Yeah, exactly.
That kind of thing.
Yeah. Anyway, I think that right there again speaks to banks and how they have built trust, and how crypto, especially DeFi space, we don't have any sort of regulation entities. We don't have any sort of insurance, stuff like that. So that is why it's so important in the crypto world to understand the developer, understand the project, understand what you're getting into, because it's, you know, it's kind of the wild, wild west, you know?
Right. And to your point, and we don't have any insurance in DGen.
Yeah.
Here's your insurance. You know, you can ensure that if you don't pay attention, you're going to get rugged. But what the legislature is fighting for now, and that's what's really going on. I think Kevin Leary, Kevin O'Leary or Kevin Leary?
O'Leary sounds right, yeah.
O'Leary. You know, he was theorizing that it's just regulation. And once the people understand that this is just too profitable for too many things, crypto, they're not going to fight it. They're just going to try to understand, okay, how can we not just get taxes, but how can we protect people? How can we insure people against, you know, loss or theft? But this is creating jobs already. Crypto is creating jobs, and that's what you want to hear. And so what you have around the world are countries that are saying no to crypto. Like, some people can only buy Ethereum and Bitcoin. So, and they're very rich countries, like in the Middle East. So their regulators are going through and saying, okay, what can we do? But they're also noticing that their competition in business are these other countries that are starting to pass the legislation and make it fair. So now let's think about the industry that we're in. It's really stifled. You can't bring money in because money will not come in against risk. So what happens when these regulations start passing? The amount of money that will flood into crypto is nothing like crypto has ever seen before. So when people tell you you're early, you're early.
Yeah, I mean, again, my ignorant point of view, I don't know jack, okay? I don't know jack, but to me, from what I see, it seems like this is, you know, like back in the day, we were trading sheeps for horses, you know, like it was the barter system. And then we finally came up with, we're going to trade shells. We're going to trade pieces of metal. We're going to trade. And then it started to become that thing. And like this is that next version. It might replace it. It might run alongside it, might die, who knows? But it's interesting to be on some sort of turning point, in history that hasn't been for quite some time. It's really, really interesting.
Yeah, I tell people I think that we're at the crap end of the space age.
The crap end of the space age.
Right, because you don't get to see the rockets taking off every day in the sky, but that you were there for that economy that changed from, hey, we build things on the planet to, hey, no, we build things for the universe, which is unlimited growth.
Yep.
Right? Now you got to find out, okay, who's going to be the robot and who's going to be the worker?
Yeah.
And so it's just got to be reconfigured, and that's going to take 40, 50 years.
I'm along for the ride. A term that I've always heard, and I've said it a billion times now, certificate of deposit, or a CD in a bank. And you can go to a bank, put your money in a savings account and have it sit there. Or you can go to a bank and you can say, hey, I'm going to give you this money. You can tie it up in your bank for X amount of time. And then the bank says, we will give you X% of interest of it. That's the concept. It's the basic concept of a CD from what I understand. You got any different understandings of it?
No, CD is one of the things that my best bestie, she introduced me to, because her mom was in banking, and her mom taught her at 19 to buy a CD.
Yep.
So she really understood what compound interest was.
That's it. Yep. It's beautiful. Compound interest. You're 100% right. And again, that is one instrument in banking that I've heard all my life, and in my head has always been the holy grail. Holy crap. This is it. Holy crap. And full transparency, everyone, that was the first crypto that Potter sort of presented to me. So when I heard the term, it acts like a CD, I was like, okay, I'm actually listening. So I just, it's super interesting to, I guess, dive in and look back and realize that, because I've been on this journey with you now for quite a few months. So lastly, I wanted to share a video. And again, this is not me crapping on banks, but what I wanted to do is I wanted to give some sort of comparison and understanding that there is a lot of distrust and it's magic and I don't get it. Like, I don't trust it about crypto. In the banking business, we know that there's been financial crises many, many times. It wasn't just 08. That's I think the earliest that people know, especially in this lifetime. But I want to show this video. I'll just shut up and run it just to give you my thoughts here. And clicking. Maybe. There we go.
Supply. So you're firmly of the view that banks create money out of thin air?
Yes, well, I produced the first empirical studies to prove that in the 5,000-year history of banking. Banks are thought of as deposit-taking institutions that lend money. The legal reality is banks don't take deposits and banks don't lend money. So what is a deposit? A deposit is not actually a deposit. It's not a bailment. It's not held in custody. At law, the word deposit is meaningless. The law courts and various judgments have made very clear, if you give your money to a bank, even though it's called a deposit, this money is simply a loan to the bank.
That's true. Yeah.
So there is no such thing as a deposit.
So you think it's put in, it's adequately named then?
So banks borrow from the public. Okay, so that much we've established. What about lending? Surely they're lending money. No, they don't. Banks don't lend money. Banks, again, at law, it's very clear, they're in the business of purchasing securities. That's it. So you say, okay, don't, confuse me with all that legalese.
So the point there, the point there is banks can do a lot of stuff with money that's quite risky. It's quite risky, that are not always 100% safe in the macroeconomic view. Again, 2008, that whole concept of the crash of the market and all that, that's where it started. The mortgages and all that and how that came about. It wasn't a safe thing, and it wrecked the world economy. Again, I say that not to crap on banks, but to give the comparison that this, just like myself for a long time, I was like, FDIC backed, it's the holy grail. There's an aura around the bank. What it does for me is it allows me to get perspective that crypto, yes, it's a trustless system. You got to be careful. don't ever give away your seed key, all that crap. But when you're able to give those comparisons, it's not as crazy high of a hierarchy, I believe. I believe that it shifts it a little bit when you can see it from that angle. Does that make sense what I'm saying?
Yeah, I know it does.
Yeah.
I think a lot of people are looking at it the way that you are, and they're going, I wonder if that's a good analogy, you know, and it is. Yeah,
Yep.
It is. You kind of have to look at it exactly like that.
Yep. Just a little side note, if you're feeling squirrely, if you haven't seen the movie, The Big Short or Margin Call, I think those are very interesting movies. I view those as a very interesting microscope into macroeconomics. You know, I'm not saying it's education, but it's interesting to sort of see what happened in history. If you have zero clue of what actually happened, it's really interesting to see that. So, Potter, you got anything? You got anything?
Well, I just know, hey, thanks for that, because without it, Bitcoin isn't born. You know, none of this.
Yep.
None of this stuff is happening right now.
Yep.
And you just have to believe that, you know, it's some kind of syncopation.
Yep.
It's all aligned.
Yep. Yeah, it's interesting that happened. It's interesting that I think it's also interesting that it seems like it's forgotten with a lot of people. But
It wasn't ever taught.
That's exactly it. That's exactly like in the movie. It's funny, they actually mentioned they're like all these technical terms and all that. Good. It's confusing because we don't want you to know. Yeah.
Right. Just the same way a baker doesn't want you to know how to bake a cake that well.
Yeah.
That's their business. It makes sense.
Yeah, exactly. Well, you got anything in closing?
Only cheers.
Fantastic. Well, builders, keep building.
It was good to,
Very nice.
not only